I think we got on to our fourth training, going on the fifth one, I think. Nevertheless, we got some good training to talk about, to go over with these lessons that's in the manual. And I'm gonna turn it over to Barbara because we always like to stay in order. And turn it over to you, Barbara.
All right. Here is our disclaimer for futures and commodities one-on-one trading group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
Yes, yes. Thank you, Barbara. Is it okay to lean on you a little bit more tonight? Um,
Yes, sir. For
okay.
quizzes, let's see what we got for quizzes. Um, the first quiz question is daily, weekly, monthly, and yearly charts tell a story. The story is the same for each time frame. A, false. B, true. C, not sure. The daily, weekly, monthly, and yearly charts tell a story. The story is the same for each time frame. A, false. B, true. C, not sure.
Mm, see what y'all got to say. I don't hear nobody. What's going on? You know y'all know this. What?
Let's see.
Nobody?
Somebody said false.
Oh, I didn't hear nobody. Okay.
What P. Brooks said false. So one person said false, which is A. Anybody else? What did Gwen? Did you say something?
You know what? Let me ask. Hey, Pam. Why the false?
Because each chart gives you a different snapshot of what the market was doing. For instance, daily is going to show you what happened during the day. Weekly will show you what happened during the week. And of course, monthly will show you what happened every day of the month.
Absolutely. Everybody understand that each time frame is gonna have a totally different story, and that's why the answer is false. Very good.
Okay, the next quiz question is when it comes to the charts, the daily, weekly, monthly, and yearly charts tell a different story. Which time frame do we prefer to use? Which time frame do we prefer to use more than others? When it comes to the charts, the daily, weekly, monthly, and yearly charts tell a different story. Which time frame do we prefer to use more than others?
Are you saying that we already established that they tell a different story, but which one do we prefer though?
Which one do we prefer to use? Out
Yeah.
of the daily, weekly, monthly, and yearly, which one?
Monthly.
Monthly.
Pam said monthly. One person said monthly.
Yeah, I would say monthly.
Monthly.
Anybody think different?
No, let's go with it. Monthly.
Monthly.
Very good. Very good.
Okay.
We
I'll tell you, I say all the above.
Right. It depends on what you're looking for
Well,
and how long you're going to stay in your trade.
we gotta get like you, Mr. Johnny. We not there yet, okay? Not where you're at.
Well, typically we use the 6 month chart to track the 50% retracement, correct?
Correct.
Yes.
Correct. Very good, man. I think everybody picked that up and understood that last week. And like the thing that Johnny always points out when it comes to those different time frames is the fact that you're getting more data on these different time frames. Is that right, Johnny?
Correct.
Yeah. So the thing is, there's nothing wrong with the daily and the weekly and the yearly. It's just that the system and the way that we trade, the monthly seems to be the better pick, the better time frame for our style of trade. That's all. Awesome. So,
When we look at time, the time of trends, you're going to see why that is because most of these trends will will duplicate the time frame, whether it's an uptrend, downtrend, sideways trough. They all seem to be pretty close to the same in timing, right? So you want to be able to get within that time frame that what we're doing. Okay.
great point. All right, Barbara, what we looking at?
Alrighty. So this is lesson 5. Today is February the 15th, and it's on charts, trends, and time frames, which is part 2, which tonight is on uptrends. This lesson can be found in lesson 3 in the manual Futures and Commodities 1-on-1. So we got a retreat coming up, you guys. This is retreat 2026. We want you in Arizona. I will tell you, every year I go, I learn something, and yet I come on the call every Sunday and I learn something new that I can apply hands on every time I go. And it helps to go to get other ideas from other people that you don't hear once a week when we come online on Zoom. So it's very beneficial and very profitable. It's April 30th through May 2nd. We have a payment plan through a firm. Just visit our website. That's futures and commodities 101.com and click on the events tab and get registered. You don't want to miss it. We got a special industry guest that's coming this year, somebody that's never been there before. You want to be in the building. I'm gonna tell you, you don't want to miss it.
Hey, Barbara, you know what? I don't mean to jump in here on you. I just can't hold this no more. I got to say something right here.
I can't hold it either. I'm on my way.
All
I already
right,
got my ticket.
John.
Sorry.
That's what I'm talking about, John. I
I
can't hold it.
know.
I can't hold it. I want to say this right here. Just, just go ahead and get it out. Um, yeah, at the retreat, there's going to be a strategy that we're going to be teaching and training on that we don't talk about in the manual. It's not in the manual nowhere, and it's not something we go over on these calls. It's going to be a training and a strategy that we're going to be teaching and training on live at this retreat. So you can flip through the manual front to the back. It's not in there, but it's a strategy that we use that's very profitable. Matter of fact, if you might on the call earlier, I was asking Barbara to reach out to Dr. Melvin to post her trade in the group that she posted in our advanced group that she made $71,000 trading using this strategy that we're talking about right now. So I'm telling you right now, it's worth it for you to come to this retreat. I know John just said he got his ticket, but John called me on me to put you out there. John said, "Man, did I see Dr. Melba's post right?"
Yeah, that was
Telling
whoo,
you.
man.
You better join. You want to join her?
I
Just
didn't.
tell you.
Once I saw that, I'm man. That's unreal. God,
I learning
that
from.
could have did a big change on my end. I don't know about everybody else, but that money could do a lot of helping on this
I
end.
I know. And look, John was at the first retreat. He was at the very first one.
Yeah, I just met
Yeah.
me is I'm just getting back into it, but no, I'm gonna go full speed. I got
Yeah,
it. It's no
exactly.
excuse. I mean, you learn the skill set, and again, I mean, you got the right people, that's teaching us. So it's just time to I'm gonna jump in. So I'm
Yeah,
excited.
man. Looking forward to it. All right. I just had to go ahead and get that out of my system, y'all. But that's for you to look forward to. That's what's gonna be going on at this retreat.
I'm telling you, you don't want to miss it. I'm just so sad you don't want to miss it. It's not something you can go back and watch later either. I just put it like that. If you're not there, you're gonna miss it. You can't go. You
Yeah.
can't get the recording. So that's another thing. So, if you want to be there live. All right. So next, our book, Futures and Commodities 101. This is what we come before you every Sunday night and teach from and instruct you. And it's a wonderful book to have. It's going to teach you, it's beginner friendly. You can follow us along. The lessons come directly out of the book that you get from the mentors on this call. And we want you to purchase this book only because it's going to help you. It makes a difference when you have something pages to flip during the week. There's an ebook as well, but if you have something to go by when you're not on the call versus just having to watch all the replays. And so if you notice, if you're a person that have the book, you're able to follow along with us. And then we do mention some things that's not in the book that can help you and expand your knowledge. If you have purchased it, if you're going to, go back and leave us a review. We would greatly appreciate it. It would help our sales. So if you guys could do that, we would appreciate it immensely. Next is we have to give special thanks to the CME group. The information that we get, the videos and the education that we share with you, it does come from the world's biggest exchange, and that's the CME group. They have a ton of educational information, and it's free to sign up with them as well. And then we use barchart.com. We use their website. That's our go-to platform. They are by far the leading provider of all real-time commodities data and stock. And the CME group also uses them. So Barchart is huge in the financial arena. All right, over to you, Delvin and Mr. Johnny.
Awesome. Get into it, everybody. Get into it. You want to get us started with this uptrend, Johnny? Or you want me to?
Um, would you start for a second? I got something going on here, and I'll be right back with you.
Absolutely. Uh, all right. Understanding uptrend. Does everybody know that the market moves in trends? The market moves in trends, and if you heard Johnny talking about the fact that we have the rules, our foundations, and I just want to ask a quick question before I get into this this slide right here. In our rules, what does our rules say when it comes to the trend? Can somebody tell me?
I hope somebody say follow the
Follow
trend.
the trend.
Follow the
Follow the
trend.
trend.
The trend is your
And is
friend.
our friend.
Trend
There
is
you
our
go.
friend.
There you go. Most of the time we forget that um, when it comes to trading in the market, you want to always be on the side of the trend. You want to be trading with the trend, and you want to make sure you realize and understand that trend is your friend, not your enemy. It's your friend. But when you see the market trading in a uptrend, the uptrend is established by a certain pattern. And what I mean is it's going to be what's called a series of the market trading higher, and it's going to be what's called a series of higher highs and higher lows. So the highs that the market make and the lows that the market make are going to go higher than the previous highs and the previous lows. This is called a series of higher highs and higher lows, and this is based on the price of the market. The price that the market's trading at is going to keep going higher, making higher highs and higher lows. All right. I need you to understand that I'm basically really referring to support and resistance. All right. That's when I'm saying higher highs and higher lows. You may hear someone explain it that way. It's the same thing. They may say higher resistance and higher support, but they're saying the same thing I just said. You're using different terminology. Okay. And when the market's trading in a uptrend, it's considered to be a bull market. That means the market is bullish. All right. We went over that. Johnny went over that with us in, training on lesson 2 about bull, bull and bear, bullish and bearish. So when the market trade up, once again, that means in a uptrend. And how is an uptrend established? An uptrend is established by the market making a series of higher highs and higher lows, or if you want to call it higher resistance and higher support. However you like to say it, it's the same thing. Okay? Anything you want to point out or say, add to this, Barbara?
Just want to point out that you want to move in the direction that price is going in. So whenever price is moving up, it's getting higher, that's the way you want to trade. You don't want to go in the opposite direction. That's what we mean by the trend is your friend. You always have to follow the price in the market to profit. The same way with prices going down. You're going to profit if you follow price to the downside. So that's how you have to just look and see the direction. If you notice this is going up higher, 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 higher. So you should be following price going higher, 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 higher. You're going in the same exact direction. But you'll see that, which is like you said, it's support and resistance zones. You'll see that. We're gonna be all full charts. So you're gonna be able to see it live in bar chart tonight as well.
Awesome. I don't know. Did Johnny come back? I don't know. I don't
Yeah.
know if you
Oh,
got.
I'm here. I left. I just wanted you to take the first. All right.
Okay. Well,
So,
you do such a great job on this. That's why I wanted to give it to you, man.
well, thank you. Um, there's okay. We're going to have three different trends, but let's start with the uptrend, which is you know marked by, as Delvin said, higher highs and higher lows. So, um, give me just a second. All right. So, if you'll notice, the trend started right here. It went up and made a high. Okay. And that is resistance. And then it reversed and made a low, right? And then it came back up and it went through a series of higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. And it keeps going until it changes direction, right? Here, it starts off with a sideways trough, right? It broke out, but then it started again. Higher high, higher low, higher high, okay? Higher high, and then it changed directions again. And we're gonna talk to you about that here shortly. What causes those change in directions? Okay, but that's an uptrend. Okay, all right. So next slide. Are we going to use the same chart? Okay. So understanding. Uh, well, I just covered the higher high and higher lows.
Hmm.
So let's go to the next slide. All right. What does the uptrend make? The number one. Okay. Are we starting on the number or the? This is the. All right. Let's go back to a chart or go to the next chart. Okay, or go back one or go back two.
Where do you want to go at over here in bar chart so we can go live?
Okay. It doesn't matter. Let's go to soybeans, I guess.
Okay.
I hope I don't skip out of go to full charts. So we're going to go to the 6 month chart. And this is what I said that what we want to do is we want to try to establish some things on the chart. All right. So on the 6 month chart, we're going to look at the lowest low on the chart and the lowest high. Or I mean not the highest high, sorry. Something like that anyway. Okay, and they're marked with a U shape mark. Okay. And I'll delete this so you can see them. All right. So you see this little U and this little upward U. All right. So what we have, we establish numbers to talk about what we talk about a 1, 2, 3 top and a 1, 2, 3 bottom. But we want to know what is the lowest point. All right. So if we come over here to the chart, ooh, I'm sorry, I don't have control. Can you place a number one at the low and a number one at the high? All right. So these are the two areas of the chart that we're looking for. We're looking for the lowest low, and it's going to then create what we call a 1, 2, 3 top or a 1, 2, 3 bottom. So if you don't mind, place a number two on the bottom and a two for the top. No, I'm sorry. Yeah, and for the top as well. Uh, no, go on the other side. Or give me a number two over here. Yes. All right. Now, I'm going to go back to my annotator. Where's my annotator? Okay.
I just put
So
the remote
when we're
control.
at the lowest low, right, we'll pick up a number one and it will change directions and form a number two when it reaches resistance. It will reverse and give me just a second, please. Here we go. It will reverse and head back towards number one, but it will not bypass that number one. And then from this point, we're going to get higher highs and higher lows. This will indicate an uptrend. And if you want to draw an uptrend, uh, uh, do a trend line on that all the way to the one. All right, this will indicate an uptrend illustrated by higher highs and higher lows. Now, when it gets to the top, it's going to form a 1, 2, 3 bottom. I mean, excuse me, 1, 2, 3 top, which will indicate that there's a change in direction again. So now, if you'll draw a trend line back towards the bottom, no, on the other side, that's all right. Okay. So now we have a trend line going down, a downtrend. Now I want you to look at what's interesting about this. The uptrend is about the same time as the downtrend in duration. They tend to mirror each other. Okay. So let me ask a question. If we just experienced an uptrend of 1, 2, 3, 4, say 5 weeks, and we get a change direction, how long can we kind of expect that downtrend to go? 5 weeks.
About 5 weeks. Yeah.
Okay. So to reduce risk or risk management, this is a time frame we're looking for. So if we've seen a downtrend going for 5 weeks, is this one that we want to get involved in the trade in? Probably not, because the amount of risk to reward is probably limited. Guess what happens? Boom, we have a new 1, 2, 3, right?
Mm-hmm.
So if you'll come down here at the bottom of this trend line, put a new 1, 2, 3 in. Okay, which indicates a change of direction again. And so now we're going to follow it back up.
Now, do we buy?
Yes.
Okay.
And to reduce risk, which you'll learn later, is where's our entry point to reduce the risk? Barbara?
At two? Oh,
At the two, just above the two.
Mm-hmm.
Very good, Brenda. Very good.
Very good. Okay. So we didn't get, what was interesting on this trade, if you'd have got in at that two, you would have experienced a small downturn, but then boom, it would have taken off. Our let me ask you a question. Where would our stop loss be?
Mm.
Right above the 3?
The 3. Correct. So we wouldn't have got stopped out of this trade when it turned back. We wouldn't have risked more than 10% of our holdings if
Oh,
3
okay.
is that what represents it. We would
Okay.
have seen a turn back and then boom, we'd be in pretty good profit right now.
Right. Wow, that's
This is,
interesting.
see how simple this is? This is not hard, right? But we have to use tools to figure out where we're going to get in, where we're going to get out, and what. So the other thing that we're going to look at is 50% retracement as our goal of how much money we make. All right. So let's. Does everybody understand what we've just explained here?
Pretty much. Yeah.
Okay. So we look at the chart, we see what it's been doing, we look for an entry point,
Mm-hmm.
then we enter into the trade. We make sure that we have a stop loss in that protects us against loss,
Mm-hmm.
and we let it run as long as we can let it run. So we
I like.
maximize our profit, we limit our losses.
Mm-hmm.
Hey, Johnny, can I ask a question right here?
Absolutely.
And I'm glad you got the participation going. From it's a good lesson to do some interaction on. So I want to ask the question of, okay, going back to the very beginning of tonight's training when we went over the uptrend and I talked about the market making higher highs and higher lows. And I just want to see who can tell me. Let's look at that very first 1, 2, 3 that Barbara has marked up right here. That number one represents what? What is it's the lowest price on the chart. We know that, but what does it represent in the uptrend?
Resistance?
So let's look at
The first number one.
The first.
Oh, okay.
Is that
like
entry?
no, you was on point. Stay where you were, but just understand that we're talking about the uptrend. So the number one would represent what? Not resistance, but what?
Support?
Support. Remember I said them higher highs really is sometimes you may hear somebody explain it by higher support and higher resistance. In this
Mm-hmm.
particular case, the number one is the lowered price, so that's the support, that's the floor.
The floor,
And then
right.
the market trades higher, and number two would be what?
Resistance.
That would be the resistance until the market moves.
That would be the resistance. Very good. And then the market trades down,
Mm-hmm.
making that number three, which is what?
Higher lows, right?
Higher what?
It'll be high. It'll be support, but it'll be higher. Not
There you go.
Higher support.
Higher
Correct.
support.
Okay.
Yeah, so you see how it's making the higher highs and the higher lows, or the
Mm-hmm.
higher resistance and the higher support, higher resistance, higher support, however you want to call it, higher
okay.
resistance, higher support, or higher highs, higher lows,
Mm.
whichever one you like to say. But I want to make sure you see this on this chart as well.
Mm.
That's what Johnny's covering with the 1, 2, 3, support and resistance.
Yeah, let me add something here.
Go ahead.
When people on a commodity or anything, stocks, crypto, whatever, people start selling. I'm selling Bitcoin. I'm taking my profits. I'm starting to sell. And the price starts going down. And more people sell and more people sell. And all of a sudden, they stop selling. Okay. That is support. That means nobody's going to sell any lower than this amount at this price. And then buyers come in and they say, well, I'll buy. And they're going to buy and they're going to buy until the price gets to a point they're going, I'm not willing to buy at that price anymore. That's resistance. I'm not going to buy that price. It's going to have to be lower. So it goes back down. Okay, well, I'll buy again. If that price that they're willing to buy back again is higher than the previous support level, and the resistance or the where they stop buying is higher than the last time, that's going to create an uptrend because people are willing to buy at a higher price and are willing to stop selling at a higher price. And up and up and up and up until it reverses. And they go, I've made the profit I want to make. I'm ready to get out. Does that make sense?
Yeah, it makes
Yep.
sense.
Awesome.
So you've got two people involved. You got buyers and sellers. They're going to buy up to resistance. They're going to sell down to support.
Awesome. So
Okay.
in a nutshell, with these ones and these twos and threes, don't let the numbers throw you off or confuse you. Just know that these numbers, all they are support and resistance levels. That's what the one, two, and the three are.
And
Okay.
can I tell you, it goes on any chart. Um, do you mind? Let's go to a 1 month chart. Okay. When we watch the video of from RJ O'Brien, they will talk about this could be a one, this can be a two, or excuse me, this could be a one, a two, and a
And three.
three during this time frame. Okay.
Mm-hmm.
And then a two and a three and a two and a three. Oops, what happened here? You know, it's still higher than this three.
Yeah,
So we're still there.
yeah.
Okay. So where's our next two? Our next two is going to be up here. Actually, our next two came all the
Because the
way up
next
to a
one,
one
yeah.
because then it changed directions. All right. So you can use this uh, on everything. Go to a 1 week chart, 5 day. There you go.
Mm.
Again, same. You can use this same. So here you went sideways, you broke out, it still went sideways, you know, kind of had a downtrend actually to it.
Mm-hmm.
Then it broke out, came back up. Now we're going to talk about gaps later on and the importance of gaps. Okay. Whenever there's a gap on the chart, it almost always comes back and refills it.
Mm-hmm. Then it went way down.
Okay. But this is a weak chart. But and you can talk, you can look at this stuff, if it's a one, two, three, you know, boom, the next. This stuff, these patterns just go over and over and over and over and over again.
Mm.
And this is what we should be looking at when we look at opportunities to enter and exit the trade. And you don't have to go through all these other high paying courses to learn this simple stuff.
Absolutely.
Hope I didn't go off base there.
Yeah,
Mm.
not at all. Great stuff. So, anything else you want to cover on the 1, 2, 3, Johnny? I think Barbara want us to
Yeah, I was going to go back to Barbara to see what she went. Where do we need to go next?
No, this was it. It was just on uptrend only. So you
yeah,
covered.
Just on
yeah.
Covered.
uptrends?
Yes, yes, sir. You basically covered everything.
But we did talk about um covering the micro. Um,
Yes, we can go to a micro market and see.
We talked about this the other day about looking at the contract specs, and some of these projects are too big for us. The the margin and the maintenance is too big, more than we got. So we can deal with micro uh, projects, which are smaller contracts.
yeah, very smaller. So we actually have what's called the full contract, the main contract, and then a smaller contract will be a mini contract, and then an even smaller contract than that is what we're looking at now, and it's called a micro. It's- And a lot of the groupings have mini and micros. Not all of them, but a lot of them do. So is there is there something for everybody, Barbara?
It definitely is.
Yeah. So where you at here, Barbara? Talk to me. What did you pull up?
So this is natural gas micro March 26. Natural gas has a large contract, three contracts, the large, the mini, and the micro. With this one, the margin and maintenance is 562 and 511. But of course, the bigger contract is a lot more than this. So it just depends on, economically where you're at in your account. If you're able to trade the large one, then you can. But we just want to let you know that some markets, not all of them, have smaller sizes. Not every market has a mini and a micro, but there's enough of them so that someone that's economically not able to trade a large one can actually trade the mini and the micros, and that's how you can build your account up to be able to trade a large account.
So Barbara, let me ask you to make sure I understand what you're saying. If I happen to be looking at a natural gas chart and I see a formation and a trade opportunity I want to take advantage of, and I go to the contract specs and the margin is $7,000, and it's too much for my for my pay grade, for my account. You saying that I could go to a micro natural gas chart and the margin is 500 and something dollars, and I can still take advantage of the same trade. The chart is going to be the same.
You can still take advantage. It's just a smaller size. They just take that large contract and they break it down in a smaller size. It's doing the same thing on the large one, but this is just a smaller size of the contract. So you too are able to get in the trade and trade like everybody else is in the large one.
Or I can trade the full contract for natural gas on a 1, 2, 3 formation that we're looking at, and you can trade the micro natural gas on the same 1, 2, 3. We could be in the same trade, but be
Same
trading a different
trade.
size contract. Correct?
Same trade, just different size contract.
So when you say different size contract, so like this, so instead of it being 8,000
Go
size,
go to the
Let
contract
me let me
specs.
go here and show you the large
Where
the
would you
large
go?
contract for natural gas.
Where
So
would you go to find that? Well, where you gonna go?
I'm gonna click on futures, and then I can double click this, but it's in the energies category. I just happen to know that, but not everybody would know that. So I'm gonna click full list, and when I click full list, sometimes you have to go through them and click on them and see what's there. But we know that natural gas is an energy. So I'm going to click here, natural gas, March 26th. And I'm going to click on March 26th here. This is all the contract months for natural gas. Goes all the way down to, oh, wow, 2034. So that's how far it trades out. 2034. So,
That's futures.
so how
yes.
did you determine what's a large contract
Okay.
and a small contract?
All right. So that's what we want to look at right here. All right. So when you look at the contract size, it's 10,000 million British thermal units. Okay. That that's a lot of natural gas.
Right.
Mhm.
But a small one may only be 1,000.
Thousand. Yeah.
I got you. Okay.
So go back to the mini then and look at the contract specs.
Another
Yeah, the
way
point value. One's 1,000, one's 10,000. Yeah.
another way you know because
Mhm.
it's in this category. Only in this category are mini and micros. That's for
Okay.
the person that's really not familiar with bar chart. Nothing in these other categories are mini and micros. They
Okay.
put them in that category, but if you're not familiar, then you need to know that so you can easily get to it.
Okay.
Gotcha. Thanks for pointing that out. I saw that after you said it. It says mini.
Mhm.
Welcome. Let's see what natural micro. Here we go. It's March. I'm gonna click on March contract, and then we back here.
So it's 1,000 uh, million BTU uh, units.
Hmm.
That's a pretty good guess, wasn't
It was.
Hmm.
Yeah.
it?
So because you're controlling a different amount of natural gas with each contract, that means the margin and the maintenance, which is a deposit and balance, is going to be different because of the difference in the contract size, which also means the point value is going to be different. As Johnny has explained to us about that before, why the point value will be different because of the size of the contract. So the thing is, just because you went and saw natural gas and the trade you wanted to get in, and the margin was way out of your range, Doesn't mean you can't still trade natural gas.
Hey,
If,
and I'm going to show you that I don't know everything. All right, so look here. The tick size is a dollar. Is a dollar. So it's 0.001 per uh, MMBTU. All right, but a point, right, is $1,000. So uh, you're looking at 1,000. So every time it moves a point, so define a point here.
from 6 to 7, from 7 to 8. And there's a lot of ticks between 6 and 7. Okay, but from 6 to 7 will be one whole point, but it's gonna be
Scroll up a
six
little
point,
bit and look at the
6 point
price.
this, 6 point.
All right, so the price is $3 and 0.008 per MMBTU, correct?
Yes, 3.008.
Right.
So here's the thing, Johnny.
So it
So
just
if
it
this
just moved it just moved 0.008 to 0.007.
Mm-hmm.
How much did that move?
Did it?
Scroll back down to the this tick size.
It moved like a tick, 0.001 something.
Yeah, zero
Right.
zero.
And what is
Yeah,
0.001? It's a dollar, right?
it's $1. Yeah.
Dollar.
Right. So on this mini, by it moving that one tick,
It
your
moved.
account uh went down a dollar.
Okay.
Okay. Do me a favor, go back. Can you go back to the full contract?
real quick, Johnny, before we go, just
Oh, I'm
make sure
sorry.
everybody's clear about this. From from 3.000
Oh, look, it's zero. It's 3.010 now. Oop, 18.
Yeah, yeah, it was 10 and then it went back to 8.
So it's moving. So just so you know, this market is currently open and
make this
trading.
chart full for me, Barbara, so I can make sure everybody see what I'm finna try to show them.
Wow,
Okay,
look at that. Look at that gap.
Huge.
right. Okay, I want y'all to not focus on the current price, but just look at we see. I know you see these horizontal lines,
Mm-hmm.
and each one of these lines is at a different point on the chart.
Mm-hmm.
So if you see that bottom line, it's at 3.000. You see that?
Mm-hmm. Yep.
Hmm.
Okay, the next horizontal line will be at 4.00. You with me?
Hmm.
Wait a minute. 4? I don't see 4.
Yeah, it's only three. It's like
Yeah,
3.000.
3.35.
Then it goes to 3.050 and then
Yeah.
3.100.
Okay, now
Yeah,
Increments
go
of
all the
50.
way up to 4,
Hmm.
Barbara.
I don't see. Oh, okay.
All the way up to 4.
Oh, okay. Gotcha.
Okay, so on
I
this
understand
micro
that.
chart, because it's a small contract compared to the bigger one, from 3.00 to 4.0, that's $1,000.
Okay.
Gotcha.
You
Okay.
understand? Does everybody understand that?
Mm-hmm.
Whole
Yep.
point.
From 3 to 4. Remember, I said it's a lot of points, a lot of ticks between each
Yep.
point.
Right.
So from
Thank
three
you.
up to 4, if that's $1,000. When Johnny said the point value was $1,000,
Mm-hmm.
that's what he's meaning. Okay.
Oh, okay. Thank
Good.
you.
Thank you. Good
Now
night.
let's go back to the full chart, like Johnny said.
Oh, it was ridiculous.
Okay? If you got into the full contract,
Look what a point does here.
Mm-hmm.
there
$10,000.
you
For
go.
Mm-hmm.
every dollar it moves, that's $10,000.
There
Mm-hmm.
you go. From that 3.00 to that same four, that would be
Mm-hmm.
10, that 10 grand. Everybody see that?
Mm-hmm.
But
Yep.
go back and look at the tick size. So we saw it move 2 ticks.
Mm-hmm.
So it's
On
ten
this, it's
dollars,
$10
20,
per tick.
$20, $10 per tick.
Mm-hmm.
And that's what you got to know.
Okay.
Okay.
Thank you.
Yeah. So don't don't get discouraged or feel some way when you go look at the full contract and it's the margin is way out of your range. Doesn't mean that, oh, I can't take advantage of this trade. Some of them have these smaller contracts. That's what we're trying to point out and show you.
Yeah, I think you should play around with the small ones, not the
Mhm.
big ones.
Well,
Yeah.
at first, Brenda, we're gonna play on paper.
Yeah.
We're not risking any money.
Yeah, really.
And all the large contracts are don't have astronomical margin and maintenance either. All of
Nice.
them
Yeah,
don't,
no.
you know. Unless you
I
want to trade
know.
Bitcoin, the big one, then you know. But
Uh,
like corn is
how
like
about what's that
1200.
SOFR or whatever the hell you call it? That
Oh yeah, the SOFR. That one's not
Hmm.
bad either.
uh,
It's not. That's not a bad one. That's a large contract. So they all aren't, really large amounts.
And even corn is not that high.
Yeah, corn is like 1,200, $1,300,
Oh, that's
Hmm.
not bad. Yeah.
Yeah, that's not bad at all.
Yeah,
And
so it
then
just
when you get
depends
into
on what you can.
the corn has a mini and it has a micro, so it's even,
Oh, that's nice.
yeah, it's like a couple $100.
Yeah.
I'll
So
make
it's
a note
just
of
according
that.
to what you can afford. So it's the point is something for everybody, basically. So it makes it affordable for everybody to be able to do it.
so let me ask you, are you still controlling $1 million here with this
On the Fed fund, you are.
on the so far?
On the Fed funds, the 30-day Fed fund. Um, I
What
think they
what's the
when they changed this from euro dollar, I think they changed the contract size on this one.
well, the contract now is points,
Yeah,
basis points.
the Fed fund is the one that they didn't. This contract size is still huge.
Mhm.
Like I think 5 million.
And what's the margin and maintenance for it?
It's not. It's
That's $300. Is that a
Can
few
you
hundred
can you
dollars? I
imagine
think.
this, Uh, Brenda?
Mm-hmm.
Can you imagine this? Look here on the 30-day Fed funds rate. All
Yeah,
right.
Barbara, can you go down
Mm-hmm.
to the Fed fund?
yeah.
No, you got it.
I'm
There
Let
it
me show
is.
y'all this, and then we'll wrap it up.
Yeah,
It's it's mind blowing, Johnny.
$5 million you're controlling
with two hundred and
Wow.
forty-seven dollars.
with $247.
Wow. That's interesting. That's good. That's
But
great.
it, but every time it moves a point, that's
Amazing.
$4,167.
That
Up-
is
Every
insane.
time it moves a point.
Yeah.
So every time it moves point 0025, you just
No,
lost.
no. For every 0025, it's what, $10 and uh
42 cents.
Yeah,
42
41
cents.
cents, 42. Yeah.
Yeah.
We
Yeesh.
we told we told y'all at the beginning that you probably don't know what you got your hands on. You get you're getting to participate in a huge market. This is where the big boys trade, and we get to participate and trade with the big boys. And yeah, now y'all don't know there's a lot of money being traded in every single day in this market. Crazy, trillions of dollars
Hmm.
a day
Yeah.
changing hands, and we just want a small portion of it, right?
That's all I
Trading
need.
places.
I just need a small portion.
But I
I'm
Sound
want
not
like
to say this.
greedy.
trading places.
Yeah, I'm
That's
not
right.
greedy.
I just
Nah.
want to say
Nah.
this, and we'll wrap it up right here. Um, to make sure y'all understand, we went over margin and maintenance, and we looked at some contract specs tonight on a mini and a micro. Full contract. I want to make sure everybody's clear about something. When we look at a trade and decide to get into the trade and look at the contract specs to see if it's something that we can trade, um, the margin that we're looking at and we're talking about, no matter what size the contract is, no matter what the amount of the margin is, if everybody understand that you're not you're not buying a contract, getting into a contract, and that money is not coming out of your account because you got into the contract. Does everybody understand that?
Mm-hmm.
Yes.
Is
Yes.
that clear
Yeah.
with everybody? You get into the
Absolutely.
natural gas trade or the Fed fund trade, your order gets filled, you're now in the trade. The margin says $247. The $247 is still in your account.
Mm-hmm.
Everybody clear on that.
Mm-hmm.
Yep.
It's not like, oh man, well,
Absolutely.
the $247
However,
is gone.
however, if the
However,
market goes against you,
yes,
that
right.
money comes out of that. If
Yeah,
it goes in your favor, it's added to it.
right.
Right. So you
And
see why I always try to tell you to replace margin with deposit,
yeah.
maintenance with balance, because you're just putting up a deposit so you can get into the trade.
Yeah. We get it.
Then you decide how much of that deposit you're going to risk on the trade. Is everybody clear on that?
Mm-hmm.
Yep.
Yes, I
Just
am.
because the just because the margin was $5,000 doesn't mean you're risking $5,000. If you decide you're risking $500, then that's how much you are risking from that deposit.
Right.
Okay,
Mm-hmm.
so I hope everybody's clear and understanding on this. Um,
Crystal,
I know
crystal
we went
clear.
over some good stuff and a lot of
We
stuff
did.
tonight, but
I am
it,
beginning to understand better. I got my
great,
book
great,
too, so that helps.
awesome, awesome. I hope you enjoy it. Yeah. So I know I'm not gonna say I hope. I know you got value out tonight's training. And
Mm-hmm.
if
Yes.
there's any questions or comments before we jump off, the floor is open for a few questions or comments.